Hello again traders, Andrew Curry here. If you're new to this channel, give me a like and subscribe. And if you go to my website, you can sign up to my free trading newsletter. Now, a couple of weeks ago, I was looking at this candle here on the Aussie CAD, which is still marked with the arrow, as you can see. This is the daily chart on the Aussie CAD, and it has a relatively large candle wick compared to the body, the distance between the close and the open price. We looked at this candle a couple of weeks ago, looked at further down, deeper into the time frames, and determined that most of that movement for the spike occurred over only a few minutes time period. Therefore, it was probably most likely a news spike. I haven't actually gone back and checked. Okay, so a lot of traders think you can trade the news like that if the price, because of a news release, interest rate decision, for example, is going to trigger a sudden, in this case, bullish movement. Why can't I, as soon as I see it move, get ready, as soon as I see it move, in this case bullish, press buy, enter a long position, the movement's made, get out at the top when it slows down. The problem with that philosophy, and the reason of course why so many traders don't succeed at trading the news, is because let's say that line is the current price, and you're expecting to see an interest rate decision be released, and let's say a sudden movement in one direction or the other. Let's just stick to bullish for now. Why can't I, as soon as I see it move, let's say at that point there, press to buy and enter a long position and ride the wave? The reason why most traders fail at that is because when you press buy, it doesn't mean that you instantly buy. What it means is you go into the queue with all the other traders there, and when there's a seller, someone willing to sell to you so you can buy, your position gets fulfilled. And of course, most of the traders around are buying at that point, so there aren't very many sellers. There isn't the liquidity to fill your position. So you press buy at that point, price spikes up, you're still unfulfilled, order still not filled, not filled, not filled, not filled. Price starts to peak around that point, at which point the institutional investors, the big boys as they're sometimes referred to, they got in advance. They studied the economic data and reasoned it was highly likely, in this case, there would be a bullish move. So they got in down here before all of the activity. And of course, it gets to here. They've now made their money and they press to sell. Because of course, lots of retail orders out there saying buy, buy, buy. And they press sell, sell, sell. So they use the liquidity of all those buy orders out there to get out of position here. And the retail traders lose out. It's very difficult to trade the news. I avoid it. Stick to your plan. Don't think you're going to make some easy money by watching interest rate decisions on a pair or whatever the news is and thinking you're going to make easy money there. You're not. This is a case where the institutional traders use the lack of awareness of the retail traders to their advantage. They get in advance. All the retail traders trigger buy orders down here, which don't get filled. And then the big boys at the top there, they press sell. And they use the liquidity of all those retail traders to get out of their positions. Don't try and trade the news. Stick to your trading plan. Have a strategy which works, which you've back tested over time.